Hey Slopers, Brian Johnson, thestockmentor.com, back again, doing a after close market update for you all. Let's quickly look at this and see if I can avoid a 17-minute video. As we see the Dow in the 60-minute break up and over that 12,200 mark. Now we are back up into some overhead resistance right at and around this 12,300, which will be your next entry coming into tomorrow's trading. Keep in mind the consolidation has now, for at least a day, been broken. If you're an Elliott Wave guy, 1, 2, 3, maybe, I don't know, could be, with a 4 or 5 yet to come. That's very, very possible. I want you to keep that in mind as well. By the way, I will be doing an Elliott Wave video. Actually, I've already done an Elliott Wave video. I'm going to release it later on, though, so Tim has something to post later. I'm going to break it up into two parts so you guys... so he has a couple of posts to do with it. Anyway, point being, I'll be talking about Elliott Wave later, because I know it's, like I said, kind of taboo here on the board, but hope you enjoy it. So anyway, if we're looking at that, coming into this overhead area, I'm not going to worry about what wave we're in. I'm not going to try to do that. I'm just going to tell you that looks like it could be kind of a wave heading up here, looking for a break over 12,300 would be your next area. Otherwise, on a pullback, looking at these moving averages here along with this, from a 60-minute point of view. If we flip right to the daily, look at this new line we can look at. Hey, looks like that overhead resistance. So, the other charts, like the NASDAQ Russells, have been pretty strong. NASDAQ in particular is starting to already break into some new levels on the overhead side, but it is also back to overhead resistance, which I'll show you in just a second. So now, here we are, and that little bear flag thing I was telling you about. Point being, breaks above 12,300. I really like the 50-day moving average, and even beyond. 12,600 would then be the next level to be watching on your trades. By the way, I want to go back and mention this. I forgot to. I called out long above 12,200. Yay, it was a great trade. Let me break this down for you a little bit, okay? Fact is, on the diamonds, it got kind of up and over that area we were looking at. Paused, and then broke. Now, this isn't too bad. This is kind of what I'm looking for when I'm trading. Something similar to this, okay? Where we start the day, we don't necessarily start up and over a particular line I have in the sand. I like to kind of roll up and through overhead resistance, or kind of start above and then roll down and through support in my entries. This one kind of worked out for us. This one was okay. We got an opportunity this morning to catch it on the way back up and get into this particular trade for maybe, what, I don't know, 20, 30 points. It was something, considering we didn't move very far. At least it was something on the day to be watching. Tomorrow, same thing on the 12,300 mark. Now, it was a lot more tricky on some of the other indices, so I'm going to talk about that here in just a second. Let's move on to the NDX 60-minute. Here's that little flag, that little bear flag I was telling you about. It's a little channel right now, and I said, what do wave 3s need to do? They need to break up and over this particular area. That's what wave 3s do. They bust, okay? So here we are. We did get above it. We're holding above it. We're at this overhead line of 2290, but there's strong overhead resistance as well, sitting at 2300. So we're stuck in a tight little 10-point range on the NDX, waiting for a break one way or the other. My breaks in the past 2 days have been above 2260 into 2280 and above that as well. Now it's really 2300. You want another break on this, it's 2300 to 2320, and then above that 2330. Those are your next overhead levels, giving you opportunities to make a little bit of money on this. I do like to trade the NASDAQ long. I do not prefer to trade the NASDAQ short. I like it long. I don't like it to the short side. But same type of concept here. You can make this into whatever wave you want to. I really don't care. Anyway, extended wave up here. Some people might. I'm not even going to try. Honestly, I just really don't care where the Elliott wave count is right now. I just care that this could, potentially be into some sort of a wave 3. And if that's the case, that would mean a 4 and a 5 are yet to come. Pullbacks then look for these moving averages in 2265-ish area. I'd like to see it hold above that 2260 area on any kind of a pullback here in the markets, and then bounce to further highs. Back above 2300 once again being your mark to go. Right here for the day, putting in settling right below the 2300 mark. Going back to some previous areas, this is strong overhead resistance. Then your next mark, gee, look at that, 2320. Didn't we talk about that here just a second ago? 2320, 2330. I think we did. I am seeing overhead resistance in both spots. I love that. I love to see confirmation on multiple charts. Weekly, same type of thing. 2317. Wait a minute. That's right. So we've got some multiple overhead resistance areas sitting up here on the NDX. If you want to trade the NASDAQ, great. But be cautious when it hits this area between about 2315 and 2320. Gonna want to move stops up. Not saying you have to dive out of your trade. Play it the way you want, but be cautious in that area. Moving on to the SPX. Here you go. Pretty clean. Looks pretty good after today. Same type of thing. Maybe a 1, 2, 3. Maybe 3's not done yet. Then we get a 4 and 5. I don't know. Just throwing ideas out. Point being, we broke that 1300 area today. However, I'm going to dive to the SPY. And the SPY is showing me what? That we gapped above it, came back to retest it, and then took off. So I would love to say, oh man, I totally called it. See, 1300, boy, break above that was a good long, blah, blah, blah. And it was a good long. Truth is, I can't take, I'm not going to, it'd be completely disingenuous of me to say, man, look at me, what a great trader I am. It gapped above 1300, then it came back to retest. Perfect, by the way, retest of this 200 period moving average on a 60-minute chart. Something I watch quite a bit during the day. The 60-minute charts I really like. And then it bounced from there and took off. Now, if you're comfortable in what you're doing, this was a pretty easy trade to take. I should say, a pretty decent trade to take. However, when it gaps up and over areas that I want to see it run up and through, you got to be cautious. This was not an easy trade. It's okay. All right, so if you got the trade above 1300, great. If you didn't, who cares? There'll be other opportunities. I'm just saying, we got the gap up, and then we come back and retest, which isn't my favorite trade in the world. However, above 1300 was and ended up being a pretty decent trade, making you, I don't know, 3, 4, 5 points, however much it is. I loved it above the 200-day moving, or the 200 period moving average here. We came right back into this area. Now look, we kind of danced around it, above it, then we failed, then we kind of closed above it, at it, on it, whatever. I'm not gonna fiddle with these little lines and whatever else. Point is, continued bullishness takes us into that 1315 to 1320 area. Seeing some pretty decent resistance up there as well. If we push up tomorrow, if we start gap up tomorrow, whatever the case might be, I really would be looking at this as maybe a 1, 2, 3 with a 4, then a 5 yet to come. And that could take us into even these higher levels up here. You're just waiting for the breaks, guys. Waiting for the breaks. All right. The other level 2 is 1317, another good strong area, confirming what I'm seeing on the 60-minute with that of the 50-day. So another strong area to be watching as well. Bulls will want to absolutely take this if they're going to happen. By the way, I don't even know where the count is, and I don't care, to be honest, but if this thing happens to be a wave 3 to the upside, number 1, you're going to see bear flags broken. Number 2, you're going to see these type of things, 50-day moving averages, they will go down. They'll be pummeled. And very possibly get us right back into these higher levels of 1345-ish. It doesn't mean that the bulls are in control and they're going to new highs and blah, blah, blah. Yes, that would be a potential. But the bears are not done. They're not baked if we happen to make this 1340, 1345 level. Keep that in mind. VIX also confirmed the move to the upside today as it dropped down into the 1617 level. I like to keep this thing at the 1920 level. And was not possible today. So we got confirmation. The FAS was a fantastic trade. If you followed my video yesterday, it was above the 200 period moving average here, which gave you one entry, then a little pullback, and then a launch to the upside. Should have made you guys some money on that one, looking at this 26 as the overhead area here. Also a push up over 24. Now here's a great example. Up over 24 was the more speculative trade for me. Look what we did. We gapped. Well, how do you know? Do you get in? Do you not get in? Well, guess what? A trade over 24 was a great trade, but yeah, I'm some kind of champion. It gapped above it. It's very difficult, very hard trade. So your more conservative entry was above this line, which I pointed out yesterday. Was the more conservative trade for me. That would have been about 2460, 2470, whatever. Turned out to be a very, very nice trade. Next target is 26, and then, of course, the 50-day moving average, maybe even that 200-day moving average. This should, if we can make it up there, this should act as some staunch overhead resistance. Notice that the consolidation has now been busted out. This will come into effect as I show you the FAZ chart. Bull flag. It is a bull flag until what? Until it's broken. It is now broken. Good volume. close down and below this. I'll give the bulls a day to get this thing back up into this area, but ultimately we have now broken this to the downside. I liked it below 48. However, once again, the gap down, but notice where the gap happened, right below the 200, not above. I think it would have held as support if it had started somewhere up in here, and it did not. So we get a gap below the 200 period moving average, and from that point on, it is down, pull back at the blue line. Look how nicely that worked. Bounce right off that blue line perfectly, and then launch yourself to the downside. I cannot stress enough how important it is to have the correct lines drawn on your chart. It can really make or break a trade. So back below this area here, not a bad short. If you took it, doesn't really make a difference. There'll be more opportunities. Point being, we have now broken the bull flag on the FAZ. It is a broken formation as of today. Watch very closely the 50-day moving average. Down below that would be your next opportunity at a short position in FAZ if you prefer to play that. Okay, volume looks good here too. Move looks good. Everything is setting up for potentially some more bullishness here. Don't psych yourself out, guys. Don't get stuck on, well, it's going to stop here, it's going to stop there. Don't get stuck on that. Just play the charts. Charts are what they are. So I don't mind you. I'm the type of person that I like to move stops. And then if it happens to go further, great. And if it doesn't, fine, I'm out. But I'm one of those, I like to move my stops type of person. I can't tell you where this market's going to go, nor am I going to try. The charts will tell you. Follow the charts. Okay, I'll be back later with that Elliott Wave video. Hope you guys enjoy the videos that we're doing. And see you in a little bit. Bye.